Everyone's dumping this stock like it's toxic waste. But me? I'm sitting back and collecting a sweet 17% yield while the market panics. TriplePoint Venture Growth isn't out of the woods yet, but they've got 2 solid quarters under their belt, and I'm watching closely. Want to know why I'm staying long while others head for the exits? There's this killer line from the movie 300 where the Spartan Dinakes hears that the Persian arrows will block out the sun, to which he replies, "Then we will fight in the shade." Turns out that wasn't just a Hollywood punch-up. Ancient historians like Herodotus swear by it. The takeaway? When the odds are stacked against you, you don't pack it in. You adapt, you grind, you fight smarter. And that's exactly what I see happening with TriplePoint Venture Growth BDC Corp, ticker TPVG. After stumbling hard, they've decided to fight in the shade instead of folding. And as a dividend-focused investor, I'm more than happy to back companies that keep swinging when others give up. Let's unpack this. TPVG throws off a mouth-watering 17% yield at current prices. For the uninitiated, they're a business development company, BDC, that lends to venture-backed firms, often pre-IPO startups. High risk? Yep. But with equity kickers baked into some of these deals, the upside can be ridiculous when things go right. Here's the rub. The IPO window has been frozen shut under higher rates. Startups aren't exactly stampeding toward public markets right now, and TPVG's portfolio took it on the chin with a string of portfolio company bankruptcies. Not pretty. But here's where it gets interesting. TPVG's management has quietly stitched together 2 solid quarters. In the 4th quarter, they posted net investment income of 32 cents per share, comfortably covering their 30-cent dividend. Remember back in the 2nd quarter of 2024, we were biting our nails, thinking the dividend might have to drop to 25 cents. Fast forward, and it looks like 30 cents is safe, for now. But this is where discipline comes in. I'm still running my numbers off a stress-tested scenario where 25 cents is the baseline. Why? Because while things are improving, I'm not ready to declare this turnaround a slam dunk just yet. During the Quanda on the latest earnings call, President and CIO Jim Srivastava kept it refreshingly real. He basically said, "Jim Srivastava, we're pragmatic. If portfolio growth doesn't show up, we'll have to make some calls." Translation: they're steering the ship carefully, watching every lever from portfolio growth to prepayments. Here's the subtle win. TPVG's credit watch list shrank from 140 million to 116 million. That's fewer problem loans lurking beneath the surface. But let's not sugarcoat it. TPVG's portfolio has shrunk from 949 million at the end of 2022 to 676 million now. That's a lot of capital not earning interest, which is why investment income took a hit. The good news? They just put 50 million to work last quarter, their biggest deployment in over a year. They've already funded another 24 million early this year, and the pace looks like it will pick up. If TPVG can ramp portfolio growth and prepayments stay tame, the portfolio should expand again in 2025, and that's the ball game. More growth equals more income, equals a safer dividend, equals potential upside on the share price. So am I pounding the table and telling you to back up the truck? No, but cautious optimism? Absolutely. The dividend looks safer today than it did 6 months ago. The balance sheet is stabilizing and management is taking a measured approach. I'm cool with collecting this big yield while management fights in the shade. This is why we play the high-yield dividend game. You don't need home runs every inning. You need solid base hits, and the patience to let the compounding do the heavy lifting. At Dimple Developments, our model portfolio has been milking income like this for close to a decade, paying us to do more of what we love, funded by dividends. That's how you build a wealth machine. So yeah, give me cash-flowing assets. Give me companies fighting their way out of the storm. And while the crowd waits for clear skies, I'll be over here, collecting 17% and enjoying the shade. That's high-yield investing, Spartan style.